Hi friends, Simit here from InformedTrades.com. Today is January 17th, 2014. Excuse me. Time for our daily Forex chart review. Basically, in this process, for those of you who are new to new to this video series, excuse me, every morning at around 8 a.m. New York time. We're a little late today. I go through the charts as I see them, the trades I'm placing. 8 a.m. New York, 1 p.m. GMT. So let's get started. Okay, right now I'm in a unique situation I haven't been in before, in which I have a whole bunch of entry orders that are just sitting there, haven't gotten filled. Let's see, right now I have actually 1, 2, 3, 4, 5, 6 entry orders, none of which have gotten filled. So let's see what's going on there. I'll leave them on. It is something to note because if they all start getting filled, I'll probably close some of them out. Just because if they all got filled, I would have too much risk exposure. I don't want to risk more than 1% of my account at a time. I'm taking a 1/4% per trade. So based on that, I really wouldn't want to have 4 trades open that are. I will have more if I moved one of them to break even. But if I'm just starting out with 4 fresh positions, I wouldn't want to move them to. I wouldn't want more than 4. Okay. Euro US dollar. This. Yeah. Well, I was thinking of placing an order on Euro US dollar yesterday. I went with dollar Swiss instead. Looks like it's a good thing because Euro US dollar just went right through that support level that I had eyed, that black line on the chart. So it's a good thing there. With this one right now, I'm not going to do anything. Just going to wait. Okay, let's go on to the next pair. Euro Australian dollar. Okay, here we are also just waiting for a pullback. Not much else to do really, aside from just wait for the pullback. Okay, the next pair to look at, Euro Canadian dollar. Same situation. We're basically just waiting for the pullback. And that's often the situation, as those of you who are watching this video daily, I say that basically many times in the video, because that's a large part of what this style of swing trading is about, waiting for identifying a trend. Euro Canada is clearly an uptrend, and now we just have to wait for the pullback to enter that trend. Now there is always the risk of the market doesn't pull back, or when it does, you don't execute it properly. I've had that challenge lately, but I think that's hopefully I'll continue to improve and get better at it. But I found this to be a worthwhile way of trading. Euro pound, man. I really had that short, that entry order placed. The market didn't pull back. It would have been a great trade to be in. But nothing I can do really at this point. Came very close to getting filled. You can see that, right? So I'm just curious to where were we? We were probably, yeah. So we came within about 10 pips of getting filled, but on a daily chart. But in any event, close doesn't cut it. It makes no difference really. Euro yen. Yeah, still waiting for more of a pullback here. So basically, Euro pound was the one Euro trade that I really, and the order is still on there. I mean, now I'll probably go ahead and cancel it. Let's go back to that real quick, because this is the one where we did get that pullback. So after this candle here, I put an entry order to enter at that same level. I was expecting it to test once more. It almost tested, right, last night, but it didn't, and now it just soared back down. So this opportunity, I think, is over. When you see a big candle like this, that's the move that I wanted to be in on, that I was anticipating by entering here, and I wanted to be in on. But that clearly hasn't occurred, or it occurred without me, rather. So I'm gonna go ahead and cancel my euro pound order now, and maybe, you know, if it of course there's always going to be some other opportunities. So um, nothing really to do there. Cancel that order. And you know, maybe when it pulls back again, or you know, if it reverses and becomes a bull market, there'll be some other opportunities in the future. Okay, so we look at euro pound. Euro, we look at euro yen, just waiting for the pullback. Euro kiwi. This is another one. Another example. Came very close to getting filled, right? And that's, what's that? So came within about 25 pips, which is actually on a euro kiwi. You know, this is that fluctuates wildly. So within 25 pips is actually kind of close. You know, the spread, for instance, will be 10 pips. But you know, as always, close. Whether you're 1 pip away, 10 pips away, doesn't nothing you can do. I still like this. I just think it's just the market. I don't think there's any. I'm satisfied with my analysis and with the way I view the market here. Um, yeah, I think I was making, you know, the right. I wouldn't really do anything differently. The one thing I might do a little differently is that I hesitated a little bit after this hammer right here. And in hindsight, you know, if I had placed the entry order right after that, I would have gotten filled in the next candle. So I guess that is the one error I made here on Euro Kiwi. But other than that, I still think, you know, entering here wasn't a bad decision. It was just a little late. Um, so it could have been better, I guess is how I would say it, phrase it. But in any event, that has also gone without me. And this is an example of, you know, there's that basic idea: small candles are where you enter, and big candles are where you make money and exit, or possibly exit. You know, I always look for a larger trend, so I want to see multiple big candles. But here we have that classic trading range. You know, we're at a support level. We have a few narrow candles. The NY Coffee analysis, which we have a whole course on InformedTrades, that sort of signals accumulation. And then that will precede a big move up, a big breakout. So that basic idea of, you know, buy on the small candles, sell on the big candles, or you make your money on the big candles, that idea is definitely playing out here on this chart. Of course, it's a little more involved. You know, don't just buy every time you see a small candle. You know, but that's a basic rule of thumb that can help you with your candlestick analysis. Okay, Euro US dollar we also looked at. That was one thing I'm glad I didn't place, and I looked at dollar Swiss instead. Now let's go to the pound. Pound Australian dollar. Yeah, still waiting for the pullback. We saw this with Euro Australian too. Pound Canada probably still going to be waiting for more of a pullback. Pound had that huge, or Canada had the huge decline against every currency basically last week, and we're still sort of, it keeps going out. So we had that stalling a little bit, but now, you know, today's candle is a huge run up. So maybe the decline in the Canadian dollar is not yet over. In any event, you know, it's clearly an uptrend, but I don't want to enter an uptrend until there's a pullback. Pound Swiss. Okay. You know, we didn't get that pullback here. You know, here's the black line I'm looking for. Another big move up in the pound. Pound rallied a lot, apparently, uh, in the European session last night or earlier this morning, depending on what time frame you're in. What were we looking at? This is pound Swiss, so pound yen. Right. Still need more of a pullback. We're going to see that. Basically, that's probably going to be the story on the pound. It just keeps rallying. So the uptrend is established, but you know, I don't want to enter an uptrend until there's a sufficient pullback. Pound and kiwi. Let's move this a little over. There we go. And I'm going to lighten this box a little bit. Oh, I selected the moving average. So let's make this a little paler, just so we can see the candles a little more. There we go. Okay, huge move up in pound kiwi. Wow. But it didn't come back to this level. I just think this is, I'm not getting necessarily the right breaks. I'm comfortable with my analysis. That happens. But I think, the waiting for the pullback is the astute thing to do. You could make a case that this was the euro, and I've looked at this. If you look at the previous chart analyses I've done, days prior, I was looking at pound kiwi. I found euro kiwi to be a much clearer analysis chart to analyze. That's why I entered. But clearly, the move happened on both charts. So I don't really. This chart to me isn't as comfortable. The support level and the candlesticks aren't as aligned as they are on euro kiwi. That's the big thing. Here we see the nice reversal candlesticks, but it's a little further away from the support level that I had identified. On Euro Kiwi, they're much more aligned, which is what made me more comfortable with entering there. Of course, it didn't get filled either way, so didn't make too much of a difference. Pound dollar. Okay, yeah. Still waiting for more of a pullback here. And we may get that, but we'll see. We are, 60 pips away from the support level, major support level. It's probably maybe a little less. You could say if we put the support level here, I would put it. Um, so maybe we're like 50 pips away. Yeah. 50, 60 pips somewhere. Let's see, price fall. Let's see if price can fall to this level, and if it does, how the candlesticks are behaving. That'll give us an idea of entry opportunities. Okay, that about does it for the pound pairs. Now we can move on to the U.S. dollar pairs. Dollar Canada probably going to be soaring. Yeah, so Canadian dollar continues to decline, which gives us a clear uptrend, but not much unless you were already in on it here, right? Um, let's see, where would have been this pullback here, potentially a spot to enter, right? Um, that would have been interesting. But if you're not in on it, then I don't think it's good to chase at this point. And as I've mentioned before, I mentioned that there was some, like after this candlestick, it looked like it could be reversing. And I don't trade against the trend, and this illustrates why, because sometimes, just the market, it's just easier to go with the trend, in my opinion. Um, but this was a clear, when it does reverse, in light of, often if it goes up this quickly, it can come down just as quick. The more stable markets are the ones that slowly ride up. But when it starts going, almost parabolic here, it can crash just as quickly, if not quicker. So that can often yield some good trading opportunities as well. I don't like to short it like that because I still want to go with the trend. But if you're willing to sort of go counter trend, especially in a parabolic market, I think that's the time to do it. And at some point, I may incorporate that into my trading. Um, so that was dollar CAD, dollar Swiss. Yeah. So same story that I've had. All these entry orders aren't getting filled. This was another one where it makes sense. So we had a big bull candle here. I wanted to wait. Then we got the red candle that I was looking for. All right, let's enter at the black line. We're still clearly in a downtrend, but it didn't get filled. I'm still leaving this entry order on. It might bounce back, and if it does, I'll accept it. But not nothing yet. Still just sort of waiting there. Dollar yen. And nothing. So getting closer, but now about 30 pips away. I don't know if I'll enter here. I probably won't. So in reality, probably more like 200 pips away, or actually 300 pips away, because I'd really like to see a pullback here to 101.30. But at least at 103.04, you can start to consider. I really want to see 101, 101.30. This major support level here. I'm gonna make this one a little thinner. Change the color, make it dark gray. There we go. Okay, so nothing to do there really. Okay, dollar Singapore. And this is another pair that just keeps going. Okay, so definitely it's a little frustrating to, see all these trends go without giving a pullback. And when it does give a pullback, I mistimed it. Um, I'm not beating myself up over it too much. I definitely could have done some things a little better. I hesitated a little on Euro Kiwi. That's what sticks out to me the most. But other than that, I don't think it's cause for changing my trading plan or anything like that. I think it's just you have to stick with your plan, adapt it when you see an opportunity to legitimately make it better. But sometimes it's just not. The market, sort of behaves as it wishes, and when it's not behaving in a way that's compatible with your system, I think if you limit your drawdown, control your risk, that's maybe the most important thing. Of course, the ideal thing is to constantly, have a system that can constantly adapt and never really struggles. But I'm not at that point yet. So for me, or I think a stepping stone to that point is that when something goes against your method, or when your method isn't, when the market's when your method's out of sync with the market, to have a risk management system in place where your drawdowns are really limited. So in January so far, I've had 3 losing trades. The biggest issue is trades just not getting filled, orders just not getting filled. But at 3 or 4 consecutive losing trades, I'm still down less than 1%. So it's definitely something you can bounce back from. It's not a debilitating decline, not debilitating being out of sync. And that's really the way I want to keep it. Some important lessons I learned mainly in 2012, a couple of years ago, where I had one drawdown month that really hurt me. I have my trading record posted on my blog on InformedTrades. Okay, so here is Australian dollar, Canadian dollar. Sorry for that little aside there. Thought it was kind of relevant. But Australian dollar, Canadian dollar, another example. I had the entry order here, but I didn't get the range. Just collapsed. In my videos last week, I had mentioned that Australian dollar would be declining this week, but just not getting filled. Here's another example. Just didn't get filled. And this Aussie Swiss actually moved it down. This one thing, I guess so after this candle here, I had my initial entry order at 82.50 or so. But higher up. So in hindsight, one other mistake I made, I definitely should have, if I had my entry order at 81.42, where it currently is, I would have gotten filled, and I think that's a logical place to put it. So sometimes in this particular instance, I was being too demanding of the market for getting too good of an entry order. So I think that's something that I can learn from on that Aussie Swiss trade. The order that didn't get filled. Aussie yen still in a range here, probably, right? So the yen everything's been rallying against the yen except Aussie yen. We're still in this range. If it can fall to the bottom, I would be interested in buying at the bottom of this range and making a range-bound trade here, which I rarely do, but I'm interested in incorporating that, especially against non-dollar pairs like Aussie yen, non-US dollar pairs, where the ranges can be wider. So Aussie New Zealand dollar. Okay, still declining. Still need a 300 pip pullback at this point, basically. Aussie US dollar. Yep, still declining. So, and this is another one where I had the entry order, because I mentioned this last week. I said, all right, this is going to be the week where we're going to see Australian dollar decline. It's really ready. It's in that downtrend. It had its pullback, and now we're ready to resume going back down. Just didn't get filled. It just went back up and then boom, quickly back down. So nothing. I'm satisfied with my analysis here. I think I did it properly, but just didn't pan out for me. And of course, better than getting filled at a loss. Okay, let's go to Canadian dollar. Canada Swiss. 2 pairs here. Yeah. So clearly downtrend. Just needed that pullback to that black level. We've identified it. Canada yen. Okay, I'm just going to make this a little lighter. Okay, that's good. Yeah, this is. I still find this to be basically in a range. So if it can fall to 93.74, that might be interesting. I might actually want it to fall all the way down to 92. But either way, it needs to fall a little further. Um, yeah. Yeah, I think 90. We'll see if the candlesticks are favorable at 93.74. That could be interesting. So I'll keep an eye out for it. Let's see what else is going on other pairs at the time. But basically, I need to see a minimum of 145 pips on CAD yen. Just let's get an idea of what it looks like on the weekly chart to see how range bound or trending this market is. So yeah, this also looks a little range bound here. This is um, basically similar to a flag pennant, or rectangle pennant. I mean, basically, we've had that run up and now we're consolidating. So often this indicates, especially with, the moving average, the 50 above the 200 um, 200 EMA, that the market is still bullish, and we have that pattern of higher lows coming in. So maybe after this consolidation, CAD yen goes higher. Certainly, I think of that, fundamentally. And there's gonna be a number of ways to trade this. If it breaks out to the top, we can, ride it all the way here. And this could be an interesting opportunity going all the way up to 122. So this is, 2,000 pips really. And it could go sooner than a lot of people expect. In 2008 to 2009 is a little bit of an exception. We may have something like that again though. But just an idea, in 2008, it went from 124 to 68. I mean, that is an enormous move, So I think we may have something like that again with the yen. InformedTrades.com/Japan. We have the whole story on the yen, a lot of the fundamentals on that. So anyway, we're still consolidating here, but when that breakout comes, and I believe based on the fundamentals in the yen, that the breakout in CAD yen and basically every other yen pair will be to the upside. It'll be a great opportunity. However, we'll see. That doesn't mean it can't decline, easily a few more 100 pips in the short term. Okay, so that's CAD yen. Let's look at New Zealand dollar now. New Zealand, Canada. Yeah. Well, this looks like a reversal candlestick pattern, but there's no resistance really in sight, and the market's just been running away. Let's see if we can fall back to support. I'm going to draw some Fibonacci here, actually. We have this swing low, this swing high, and let's see, this is the kind of level. Okay. Is that? Let's also. Okay, so you could also draw. So if you drew your Fibonacci from here, this level, we have a gap here, and some may say it's going to fall all the way down here to fill that gap. Possible. It's always a little tricky. I would need to see it fall to at least, let's actually call that here. There we go. If you can fall there, I think that'd be potentially an interesting opportunity. But in any event, so this is a reversal candlestick. I don't know what else is going on. Oh, this is on the weekly. I do this from time to time. Let's take it to the daily. Okay, actually, it might not be that different. I'd probably still want it to fall to this level. It's much more compelling analysis on the daily chart. You can see it. You can see how this is a much bigger fall if it falls all the way down to 86.70. Somewhere around there. But we still have basically 400 pips to go. Until then, we'll see. On the daily chart, we are seeing, on the weekly, we are seeing that reverse candlestick. On the daily, it looks like it's already turned, and it really rallied up. So those who shorted, are looking good around there. Personally, I'm looking for a 400 pip fall and then possibly buying there. The trend will still be bullish at that time. New Zealand, Swiss. Yeah, okay. So this is another range bound thing. I really want to see it fall to the bottom or go to the top and trade that range. But for now, when we're in the middle of that box, I don't really want to do much. So basically, we go to the top of the box or break out of the top or bottom of the box or break out of the box. I think that'll be the opportunity that I'd be looking for. New Zealand yen. Yeah, this is, we're getting close to a pullback here. I'm going to just change this here and change the color. But I would